Global Select Fund is called the Global Select Fund because we select the best stocks from all around O Hambro, but we recognise that some stocks might be driven by the sector that they're in, so we need to have a sector view, and we recognise that some stocks might be driven by the country that they're in, so that we need a country view as well. So you end up with a portfolio of 40 to 50 stocks picked from the best stock ideas, tilted to our favourite sectors and tilted to our favourite geographies. Well, number one, it's 100% equities. So obviously it's aimed for investors that want some global equity exposure. Clients use us in various different ways. Some clients use us along with an index or a passive fund as well. Other clients use us with other active managers. The Global Select Fund is what's known as a core fund, but it has a growth tilt and a momentum tilt and a mid-cap tilt. So quite often clients will use us with another manager who might have slightly opposite tilts. They might have a value tilt or a large cap tilt. The key principles for us on portfolio management is that over the very long term, earnings matter the most. So the number one thing for us is earnings growth. The second key principle is what you pay for that earnings growth. So that's valuation. And then the third key principle for us is it's really, really difficult to go cycling into a headwind. It's much easier to go cycling or sailing in a tailwind. And by that, we mean the trend. So we want to find stocks and sectors and geographies where really positive earnings growth, attractively valued, and the shares are already in a positive trend or they have a tailwind. We start with earnings revisions. We screen all stocks in the world for who's got the best earnings revisions. Earnings revisions are a very good guide as to which companies' earnings are surprising on the upside. And once we've got that list, then we look at how are the sectors doing, which sectors are performing well and which sectors are performing badly. Think how important the decision between technology and energy or between financials and consumer is. And then thirdly, we think about the country that it's in. And that could be surprisingly important. Let me give you an example of Toyota. Toyota is a fantastic company, but when we look at Toyota's share price, it's got a very high correlation to the Japanese equity market. And so we would only buy something like a Toyota with a very high correlation when we actually like the neighborhood that it's in. So the way we construct the equity portfolio is very similar to real estate investing. And I'm sure most listeners know that if you buy a really good apartment in a dreadful neighborhood that's getting worse, you're probably going to lose money. But if you buy a good apartment in a neighborhood that's improving, you're probably going to make a lot of money. So that's our portfolio construction, that's our process, trying to find really good stocks in really good neighborhoods. Sometimes the neighborhood is a sector, sometimes the neighborhood is a different country or currency.